Hello, I'm Anthony Curcio, a senior partner at Summit. For more than 2 decades, Summit has been at the center of credit subsidy and risk estimation for federal lending. Recently, we sense a coming explosion of innovation in credit subsidy modeling, risk analytics, and reporting, and we've recorded 3 conversations to talk about why innovation is needed. First, a little background and history. The U.S. government is one of the largest lenders and credit guarantors on Earth, with more than $5.2 trillion of risk on the balance sheet. This includes more than 24 active loan programs, and some of them are enormous. For example, the lending operations at USDA alone is as large as a top 10 commercial bank. Since the passage of the Federal Credit Reform Act of 1990, risk modeling has evolved through several phases. The first 10 years after FCRA introduced the first generation of present value scoring and risk analytics. Model quality for these early implementers was mixed at best. They lacked automation and were often handmade. Most were built in Excel or even Microsoft Access. In the early 2000s, Congress created more energy and infrastructure programs. These issued large loans to institutions, not citizens. This decade also brought the first widespread use of econometrics and sophisticated predictive modeling, going beyond the use of historical averages to predict loss. From the 2008 financial crisis through COVID, Congress greatly expanded the use of credit by both creating new programs and expanding existing ones. This spike of activity brought investment in a new generation of modeling and analytics. In the last few years, the President and Congress have doubled down on using credit for energy, infrastructure, and nearshoring of manufacturing, attracting policymakers with very strong backgrounds in finance. While some progress has been made, modeling and analytics for risk-based budgeting just hasn't kept up with the private sector. After 35 years of FCRA, too many federal credit programs still rely on disconnected spreadsheets, legacy systems, and manual workflows. This is just inefficient and prone to error. Federal agencies still often lack the in-house technical expertise or bandwidth to build, maintain, and update complex credit models, limiting their ability to perform timely re-estimates, scenario analysis, and policy simulations. Diving into challenges like these, which are indicative of legacy solutions, is why we're having these conversations. But don't worry, we'll also include a hopeful vision into solutions that address these challenges head-on. Kate Lynch Machado, Summit's Director of Strategic Growth, will lead these conversations. I hope you enjoy them.
In our previous 2 conversations, we discussed the pain programs feel from legacy systems and the continuing need for domain expertise even as we shift to the era of cloud-based applications. The third conversation is about how clients and contracting officers will need to rethink procurement and statements of work to set the conditions for the next generation of cloud-based model applications. Okay. Joining me today are 3 guests. I'd like to welcome Sam Sung. Sam is a partner at Summit and brings experience over the full lifecycle of federal credit programs. He's known for his work helping to set up new federal credit programs, which requires knowledge of subsidy modeling, program operations, organizational design, and change management. Next, I'd like to welcome Christine Shaughnessy. Christine is a senior manager at Summit and has worked for over a decade designing and implementing models through all stages of the federal credit program lifecycle. She is known for her ability to translate the technical requirements of cloud-based model application to non-technical audiences while continuing to ensure the solutions deliver best-in-class calculations. Finally, I'd like to welcome back Anthony Curcio. Anthony is a senior partner at Summit and is a seasoned leader in federal credit policy and budgeting. He is known for his work simplifying complex federal financial systems and has served as an underwriting instructor for several infrastructure programs. Anthony brings a unique blend of technical expertise and policy insight, making him a trusted voice in federal credit reform. We look forward to jumping in today and have this conversation about domain expertise, technology, what contracting officers may think about how to get new solutions into their system. My first question, is what are some of the biggest misconceptions agencies have about transitioning from legacy systems into cloud-based applications? Why might some program leaders resist the shift away from owning their own in-house code to considering a cloud-based solution? Christine, you're doing this all the time. You've been doing it for years. Are they ready for a shift like this?
I think they are. I do think they have some, maybe preconceptions that they need to get over first. I think a lot of program leads might feel like a move to the cloud or cloud-based applications is going to leave them stuck, right? Stuck with some program that they didn't have a hand in designing and developing, that they will not be able to adjust for their workflows or their own credit programs and requirements, when really that's not the case at all for cloud-based applications and environments. They are actually designed with just that in mind. They are configurable. They have different APIs, different layers. And all of that is to serve a more customized application. And the real, important piece behind that is that they then can work with, the developers on the code to ensure that it really is reflective of their own program, of their own workflows. And in fact, keeping Frankenstein models is what I like to call them, those models that you've had over 10 years and you're adding a piece on here and a piece on there. While it might seem like you have, full ownership of that, and you can fully customize it in every which way, there are downsides to that. You put one thing on the front end and 5 things pop out on the other side. And suddenly, your model that you had that is really customized has become very complicated and very difficult to manage and maintain. Whereas a cloud implementation allows you to kind of break that down into different pieces. And so as you evolve and grow, you have a model that can evolve and grow as well. It can scale up, it can scale down. So it's really kind of broadening the concept of what folks think of as a model. It's not just the code, it's the entire environment that code is in. And that's really where I think a lot, with that mindset and that shift to that kind of concept, a lot of program leads would be excited to move into that space.
Yeah, maybe I'll add a little something to what Christine said. As it relates to misconceptions, and I think one of the things that strikes me based on what Christine just said is sometimes clients ask for what I call the Swiss Army knife. I've had a Swiss Army knife for years. I love Swiss. I think they're so cool. And one day I'm going to use that little scissor thing. I haven't used it yet, but the little scissor piece on my Swiss Army knife, I'm going to use it. I think I used the bottle opener once in 10 years kind of a thing. And I use that as a silly example because a lot of times clients might say when they have their own individual model, gosh, I might need this. And, while you're at it, might need that. And we have dutifully co-developed that with them. And that extra 5% functionality adds an extra 15% complexity. And that's one more thing that can break. And that's one more thing that might have a pop-up blocker. And that's one more thing that might be affected when your Microsoft suite gets upgraded, yada, yada, yada. The kind of things that we were speaking about in the earlier podcast as well, earlier conversation as well. And so I think one of the misconceptions is that we won't have as much functionality. I think Christine reminds me is that we'll have that function, all the functionality you really need, but I do think it adds a little bit more seasoned thought, a thoughtful process and what we really need and how that compares and contrasts to what we've learned, what other federal credit agencies have learned about the advantages and disadvantages. But if you want your scissors and your bottle opener, you're definitely going to have it, and it's going to probably already be developed. If there's a cloud-based solution, it's probably going to already be there from somebody else who wanted it first.
Thank you so much. And it leads us actually into our next conversation. And Sam, we kind of talked a bit about what program leaders may need, what kind of how they may perceive things, their misperceptions, kind of how to think about the next steps and having cloud-based solutions around some of these federal credit programs and applications. What should contracting officers and program managers keep in mind when drafting statements of work for these cloud-based credit solutions?
It's a great question, Kate.
Thank you.
I think in the federal credit and the credit program sphere, there are contracts that have been around for 10, 20 years that the SOW has been recycled many, many times and has served them well. They've gotten what they needed out of it, and usually it's an approach that's based on people by the hour doing specific functions to develop an application for the government that is handed over at the end of that period of performance that sort of cranks out the subsidy results as needed. This is a different regime. I think a lot of those SOWs will have to be reopened to make sure that what the government is purchasing, instead of a code base or a piece of software, is really access to a platform that does everything that it needs, and they'll have to articulate it in terms of these are the requirements that we need the platform to be able to deliver, and it's going to be a software license that we're purchasing for a fixed amount of time, and then all the responsibility over managing the infrastructure access, that's going to be on the contractor, and it'll have to meet certain security requirements, and it'll have to be up and running all the time, and that's going to be a shift in how programs think about the software itself, the tools, the delivery, and then as a separate consideration, traditionally, the software piece has been bundled with services, and we don't think that those can necessarily be separated going forward. And so it's integrating the software license part of the need with the services that go alongside it, and making sure not to split that into two separate procurements, which can happen sometimes in federal government.
You know, what I'm reminded of is that as we innovate into the future, and I think that we're heading towards cloud-based applications, we're going to have to do this hand in hand with our procurement officers and our program. I think our program officers are there. I think our procurement officers might be. It's going to take some more education, because you can't take a 10 or a 20 or even a 10-year-old statement of work and easily cram the square peg of modernization into the round hole of legacy. It's just not going to work. And so I guess that's probably why you're having us for this conversation, is to talk about the technology and the innovation is a couple of steps ahead of the procurement process and the statements of work. And that's okay. We're just going to need to go through an education process, I think, to get there.
Yeah, I think you're right. And I think part of what we find challenging about that process is having that time with leaders in the federal government to be able to have those conversations, and the procurement staff to be able to kind of be part of that, integrate that process into the program staff discussions. And so I look forward to that as we kind of explore this going forward.
Especially when, it's not just maybe the program office that is going to be leveraging that, new application. They now have other offices, right, that might be interested in leveraging some of that same environment. So now you're trying to coordinate across multiple programs, or program leads trying to do, two different things within the same application, which thankfully we can do with our the movement to the cloud application environment. But that just kind of adds another layer of complexity. It's not only for one team or one individual that we're trying to build these things for, because the benefits of the cloud applications are really when they are fully integrated in agency workflows and across individuals, not just one person owning it.
Yeah, good point. Earlier in our conversations, in the previous ones, and I hope folks go back and take a look at those and listen to those, it was about pain points, but it was also about domain expertise. And I thought about that, Sam, when you mentioned that they'll need to add not just the platform itself and the kind of the things that go into that, but the human component to that, to the statements of work. Can you talk a little bit about why that's important?
I think one is the software integration piece and sort of change management of these are going to be new tools for the programs and the people running them. Those require some training, some change management, some new documentation to get everyone familiar with those new tools, but also processes. And it's not going to be successful unless whoever is providing the software or the technical piece understands the program very well, has been in there doing that for a while, and can update the processes accordingly. The other piece is, in a lot of cases, in federal credit programs, the knowledge is very specialized, and there aren't hundreds of experts in federal credit walking around Washington. There are a lot of cases where some of the activities are done once a year for a concentrated 3-week period that is very intense, and then it doesn't make sense to hire 5 people to do that and then have them hanging around for the rest of the year. So being able to procure not only the software, but also the individuals to help run the processes smoothly makes a lot of sense for some credit programs.
Absolutely. And I think going back to, our conversation with procurement officers and program officers, I think, Sam, your point is while the software and the people around it are two separate deliverables or CLINs or whatever they call it, right, in the contracting world, that they're coming together. You can't buy one. It doesn't make sense to buy one without the other. There might be some exceptions to that, of course, but in the main, they're going to come together, or you're not going to get the bang out of the buck for either the other one that's left out.
Yeah, and I think GSA has come around to that and has offered really great solutions to be able to kind of figure out how to offer their clients, which are agency staff and program leads and contracting officers, to be able to buy a product and the services that go with it. So there's some really innovation going on the contracting side that allows that to happen, which is useful. And so, transitioning to our third question, thinking about cloud-based and cloud-native applications, Anthony, can you give us a sense about model ownership, version control, audit readiness? We talked to a lot of clients who are worried about that audit model ownership and model compliance. Is there any difference around those issues from a cloud-based solution?
Yeah, great question, Kate. And I want to go back to Mythbusters. I've been in this business for almost 20 years, and I want to go to a couple of Mythbusters. And the first Mythbuster, which is not a direct answer to your question, but I think it leads up to it, is questions about cost and ownership. I think the myth, and by the way, I wholly subscribed to this myth for years. So, no shade on those that have also believed this. But the myth is that, gosh, if I can just own a model, sort of like home ownership, it's cheaper to own than to rent. That's just sort of common sense. And I think that common sense does not always guide us well when it comes to models like these. And I think that for years the thought was, gosh, I can pay a team once, I'll own the model, thanks for your service, see you later, now it's my model and I'll run it. The reality is that has just, that's just never really worked, because models, to maintain their current status of innovation, they need maintenance. Software environments are updated, security requirements change, and you need a badge and a PIV to get into the building, to put your hands on it. For many years that was true. That's not so much true these days. But when you add the cost of maintenance, you're not really saving any money. But the more insidious problem that this myth brings is that it's not just that it costs you the same, but it really stifles innovation, because then you have to ask for and price a model upgrade, and we don't always have budgets for that, or you can't explain that, or you have to say, oh, the model's broken, otherwise you can't get money to fix it. And we don't need to be, something doesn't have to be sick to get better. We just need to be continuously getting better. And so I think that the philosophy around owning a model does not lead to the best outcomes because it stifles innovation, and then you only get money when something's broken, and then you have to always claim your model's broken, and nobody likes to do that, right? So I think that's the first myth buster. And the other thing is, do you really own something that you can't fix? You know, I think that's another philosophical question, if you can't fix it. So those are some of the things that come to mind as it relates to ownership. I think that what people own is their policy mission and their data. That's what they really own. And I think that models will always be in constant flux over the years. And I think that a cloud-based application approach allows for faster innovation, for cheaper innovation. It also allows us to share economies of scale. In a previous conversation, my business partner, Albert Lee, talked about the dirty little secret in federal credit modeling is that he said this number, I'll take it at face value, that 70% of the cost of building a model is setting up the data infrastructure, which is something that can be repeated from model to model. 30% of the cost is the individual bespoke elements of your credit terms and conditions, the credit product, and the individual econometrics. But if we can get that chassis built once and to share that efficiency across a number of credit programs, which is what a commercial style cloud-based application can do, then I think you'll still own your mission, you'll own your data, but you won't necessarily own the maintenance headaches that come with keeping it innovative and cutting edge. So those are some initial thoughts about that.
Yeah, and as you ponder these, I'm curious about how that chassis and then the process around the other 30% help around audit readiness.
Yes. Oh, you asked me about audit readiness before. Thanks for prompting me again. So I think audit readiness, here's what we've done for 20 years. And I'm right there with it. Like I'm not throwing any shade. This has been my career, and so I've been right in there with it. I think a lot of model owners have said, we've got the best model in town. It works great. What are your questions? That's the way we've approached auditors. What are your questions? Can I give you a briefing on my model? You want a PowerPoint? Like, what are your questions about my model? I don't think that's the best way to go forward. And I think a cloud-based application will allow us to go ahead and pre-configure outputs to models for re-estimates, because re-estimates really inform a balance sheet a lot more than obligation. And they're going to come in an output that's already formatted for the auditor. And when she walks in the room or he walks in the room, this is what you should be asking me. There literally is a list in TR6, Technical Release 6, to reveal what the auditor should be asking. Here are your questions and here are the answers. Now, if you have follow-on questions, that's great. We're here to answer that too. But I think there's a lot of efficiency that can be gained from creating standard outputs to make them audit ready. And it's going to increase standardization. And it also, by the way, gives our auditors a chance to think of more thoughtful questions as opposed to spending their time making checklists that we could have predicted they're going to make anyway. So yeah, I think it's going to be better for the auditors and for us too. I think it's going to be better for everybody, and we can talk about stuff that matters and not stuff that doesn't.
Yeah, and Christine, I know you've been through some of this actually in real life scenarios. Can we talk a bit about like how that has worked for you for either the audit piece of that or the model, kind of compliance?
I mean, it comes from a couple different perspectives. One, this allows us to have something as simple as access controls, right? Maybe previously you put a little password on your Excel workbook and that was kind of your coverage you had. But now, we can actually have logins. You are already verified through your, whatever your verification method of choice is. And when you take actions within the environment, all of those are logged. So we know, who is working on what, how did it flow from one person to the next? Where did it change in the process? Did it go from, review and approval and there was a conversation in between and there was a note on a risk rating change, right? All of that can be there without having to go hunt down for 5 emails and an attachment. Because it's there, it's all tagged and connected and you can extract it. And, in the beautiful world, there would be a pre-designed, format that it comes out in and you hand it over. But it's really, all through the entirety of the cloud design really supports that auditability, traceability, replication. If you want to come back in and say, oh, how do I, tweak something and see the impact of it slightly differently, it makes it really easy to do those sorts of things.
Yeah, and Sam, just thinking back to the question we were talking about with contracting officers or program officers coming together around a statement of work and contracting, it seems what Christine just mentioned, which is about, kind of being able to have these checklists and have this kind of process already there, would be helpful for that statement of work, because that would be documented ahead of time that they would want that. And how do you deliver that?
Absolutely. I would assume that when the programs are putting together the statements of work with the contracting officers, they would, in the list of requirements, would be a requirement that the software or the platform is able to produce outputs with that look like XYZ for whatever purposes, and also that the database in the back end is engineered in a fashion that the data is easily extractable to feed into those reports.
And I think just to wrap up question 3, we've got about a few minutes left, and I wanted just to highlight kind of to wrap this up, because it seems to me that the status quo is, as Christine mentioned, the Excel spreadsheets with a passcode that we've been doing all about 20 years now, and kind of how do we modernize that. And it seems to me that there may be a little bit, you mentioned education, but it's also how do you have that vision and that kind of sharing of the information with contracting and program officers that allows them to be able to know about this? Are we bringing people up to speed from demos? Are we kind of talking about it from like the agencies and the offices that we meet with? What's your preference there, Sam?
I definitely remember, and this happens a lot, especially when we're setting up new programs, of we're not really ready for a full system. Why don't you just put it in an Excel spreadsheet to get through next weekend, and then we'll figure it out later. So I think we're frequently having the conversation of, we know that you need to get through tomorrow, and in the long term, this is what we think every program eventually needs. Mm-hmm. And sometimes we have that conversation with contracting officers, but it's a bit of an advisory role that we try to help our clients understand that in the long term what their needs are going to be.
Mm-hmm.
And Kate, some thoughts came to mind when you asked that question for me. I won't mention any names, but some programs are doing a really good job of this, and I think it bears repeating. I really love it when contracting officers and program officers, we're going to issue an RFI and just ask the industry to comment about what should we be asking for. Mm-hmm. Because, a little bit of a shameless plug for Summit, we have white papers that describe what you should expect. And I think a lot of times when we talk to contracting officers, and they're sort of selling themselves short. Like, you should ask me for more. Like, we have a lot more, but who can blame them? They're busy. We're the ones with the imagination here because we've been doing this for 20 years. So I think more RFIs to ask what's possible is helpful. Mm-hmm. We're accepting a white paper. You don't have to act on it. Reading a white paper to inform your imagination about what's possible. But critically speaking, if you've got a 4 or 5 year contract that's coming up for recompete, ask for that a year in advance. Don't ask for it, 2 weeks before the RFP is going to come out.
Thank you all for joining me for this conversation. We've covered a lot of ground, from legacy misconceptions to the future of cloud-based procurement. If you missed our earlier episodes, be sure to check out our podcast number 1 and 2 for more insights on federal credit modeling and expert-led solution design.